The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 8th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, is something you and we must master each and every day. So let's begin our day with empowering beliefs. You know, there are those who have little and give it all. These folks, these are the true believers in life and the bounty of life for them and their coffers. Well, let's just say they are never empty. Always remember that when we learn to give thanks, we are really learning to concentrate not on the bad things, but instead on the good things in our lives. That is the way to live. You know, be thankful for the smallest thing. And then what? Then you'll be worthy to receive something even greater. That's how it works, folks. That's how it works, folks. You see, the way the world works is that the more we give, guess what? The more we have left. Well, let's go check out and see what we've got left inside of the markets out here. A little bit of a brief sell-off right at the open. Dow right now is down 63 points. It's trading out at 16,468. S&P off a point and a half, trading out at 1836. NASDAQ composite up 6 points. It's leading the charge now to the upside, trading out at 41.59. Russell 2000 off about $1.70, trading at 11.55. NASDAQ 100 up 6 points, trading out at 35.63. New York Stock Exchange off 8. Not a big deal out there. It's trading out at 10.318. Oh boy, do we want to be paying attention to the NYSE out here. Let's see, the volatility index, it's flat. It's up 8 pennies. It's still below the 50-day exponential moving average. We've got net declining issues of 924. You need a total of 1,509 net declining issues today in order for that summation index to turn down. The summation index turns down. If it turns down today, that would not be bullish. That would most certainly not be bullish. Why? Well, let's go take a look at the New York Stock Exchange. The reason being is because we've got that island reversal pattern, the most bearish pattern out there on the widest market breadth index that we pay attention to, that I focus on. That's the NYSE. You've got that little gap that took place in between December 30th and December 31st, as well as the gap between December 31st and January 2nd out there. That created that little Gilligan's Island out here. That says as long as price doesn't get up to 10,366.58, the island is in place, and no passengers will have been rescued. They will have had to, put on their life jackets if they had any and swim, I don't know what's the right word out there, to away from that island. So at this stage here, yesterday was, good day in the markets, but with regard to the New York Stock Exchange, what it didn't do was go out and rescue any of those passengers out there. So we want to be paying attention to that. The number to be paying attention to today, 1509. Hey, that doesn't mean that if we don't get it today, right now we're down minus 901. Well, that just means it's less than 1,500 issues come tomorrow out there on Thursday. Could be Friday. We see this market just chop around here through Friday, Jobs Friday, before we really see some conviction. Now, on the New York Stock Exchange, we know what we're also looking for on the bullish side, right? What you're looking for on the bullish side is you're looking for the boat, that means the market, to go out and rescue all those passengers on that island and go ahead and void and vacate that island. In fact, pick up those passengers and move to higher pastures out here. And higher pastures would be a close above the December 31st high, 10,406, which is very important, both bullish and bearish, to see what's going on. You ask why? It's very simple. The reason why is because it's the New York Stock Exchange that now had gotten up and over its highs from 2007. Big consolidation pattern out there, 6,000 point consolidation or so. I ought to just write it in here so I don't have to do the math. I think it's about 6,000 points, and that's from the high 10,387. Well, you can do the math. So say 10,400 to 4,400, which is the lows back in March of 2009, got down to 4,100. So I'm going to round up a bit. So that would have been that is a 6,000 point consolidation. That's what we want to be paying attention to. We also want to pay attention to it. If you didn't catch the first hour of the show, go back and listen to the archive. We talked a lot about and we took a look at longer term charts as well as some shorter term patterns that are out there, what it is that we want to be paying attention to. Inside of the longer-term chart, mainly the monthly chart on the New York Stock Exchange, there is no price relative strength divergence, a pattern that the majority of the time precedes any kind of major market correction out here. Right now, what we have seen, though, in the New York Stock Exchange is rejection of the 2007 highs, and on a daily basis, what we have seen is an island reversal pattern. We want to be able to put those two together to see which one is going to work out. Of course, if it's a daily chart that really has begun the change in trend, then you're looking for the New York Stock Exchange probably to first pull back to about the 94.38-ish, 89-ish, 100. That would be the bottom of the rising price channel out here, or the primary trading range boundary line that is underneath right around the 94.30-ish range. So that's on the New York Stock Exchange. We know what we're paying attention to. We know what it is that we are looking at there. Let's go back and check out the indexes, and then we'll take a look at the ETF structure. Let's take a look at the S&P 500 right now. It is trading off 2 points. What the S&P did yesterday was it made the 0.618 retracement. I mean, it almost made it to the T. And what I mean by that is if you take a look at the swing point high from December 31st, that high, 1849.44. You come all the way down to the low that took place on January 6th on Monday, and that's 1823.73. From high to low, the 0.618 retracement is 1839.62. The intra-session high yesterday was 1840.10. You got to love that. 1839.62 versus 1840.10. What are you looking at? 48 pennies right there. It hit that. Now, a wide-ranging bar, a bullish candle that took place yesterday as was coming into that 0.618 level. It could be setting up the C point of the A to B equals CD down. I would suggest that most likely what you're looking at is that the E, as at the S&P 500, would like to make a run to the 1843 level, the 0.786 retracement. That, too, would set up an A to B equals CD down. But more likely what it would do is actually move in, and whether it gets the 1843 or it just gets to the bottom of the swing point, which is December 31st, out at 1842.41. I would suggest that based on yesterday's bar, that is the more likely outcome that the S&P wants to achieve, whether it's today, tomorrow, Friday. That's what it wants to do. Now, if you see a close inside that swing point, meaning inside 1842.41, then what you would be taking a look at is a move to test out the high at about 1849 level. So that's what's going on inside the S&P 500 as we speak. Let's go check out the other indexes. Let's look at the NDX 100 here. What did the NDX 100 do yesterday? Well, if we take a look at the going from its high on December 31st, that number 3592, down to the low on Monday, January 6th, that low is at 3512. If you go from the high to the low, the exact 0.618 retracement is 3561.61. What did it get to yesterday? 3562.98. Got to it? Now what we're seeing, and it was coming in there, now that yesterday's candle inside of the NDX 100 is more bullish than the candle that we took a look at inside of the S&P 500. Does that matter? I venture to say it does matter. Why? Because it was the NDX and the composite that were the weakest indexes out there, and they also gave the strongest bullish reversal signals yesterday. That's called a bull separating line, not a bull separating line out there. That's where, if you take a look at it, just take a look at what is the change in psychology of the market, or what should be the change in psychology of the market when that occurs. Think of the power that was involved, because you had the market moving down on Monday, closed out. In this case here, the close of that session was at 3526.96. The energy that was needed, in essence, for the next day was it had, in order to have a bull separating line, it had to open, in this case here, at or above the body, the open of the candle. Well, the open of that candle from Monday was at 35.39. The open of yesterday's candle was at 35.39. It takes a lot of energy to really be able to reverse course. So in order to be able to do that, then get up to the 0.618 retracement level, do that in all of 1 day's time, says, you know what, it too wants to get up and move up to the 0.786 retracement. It too actually wants to get up and probably test the low of December 31st, right around 35.75. And that's what it looks like it wants to do as we speak right now. That is in the NDX 100. Let's take a look at the Russell 2000 out here. What is the Russell 2000 doing? I got lines all over the place. Let's get rid of some of these lines, just clear that up for you, especially if you're watching the show live. Let me get rid of that retracement line. So what had happened here from high to low? Now, the high inside of the Russell did not take place on December 31st. The Russell made its high early. It made its high on December 26th out there. It did that with a price point of 1167.96. If you go from that high to the low, now the low in this case here in the Russell 2000 took place both on January 2nd as well as on Monday on January 6th. 1146.97 and 1146.60, which is really the January 2nd low. So if we go from the high to the low, you'll see the 0.618 retracement out here, which is what was hit yesterday. That came in at 1159.80. The actual high was 1160.02 out there. So the Russell 2000, now, what the Russell also did here, and this is what we want to be paying attention to, the Russell had a gap, the gap from December 20th to the December 23rd candle. And when price came down on January 2nd, when price came down yesterday, all it was doing was testing that open window. That still is a very strong area of support because it's now been tested 2 times. So the Russell 2000 has not tested its swing point high December 26th. I suspect that, it wants to do that. It's going to either do that or I am less certain with regard to the Russell 2000 with regard to its candle structure. And the reason is this. If you take a look at its candle structure out here, yesterday was nothing more than an inside bar. So there was no bullishness to the candle that formed yesterday inside of the Russell, unlike what we took a look at inside of the NDX 100 out there. So in this case, maybe the Russell, all that it's going to do is really just travel sideways out here. So the Russell, now what we can say, and this is the cool thing, because when we take a look at all 4 indexes, meaning the S&P, the Dow, the Russell, and the NDX 100, and really in the composite, so we're really almost doing one and the same here when we take a look at the NDX. Now of the 4 indexes, if a market were going to jettison itself to the downside, which one is the weak link out here? Yeah. No question about it. At least candlestick-wise, and I would have to say everything else-wise, it would be the Russell 2000. Just know, though, it's got a strong level of support, and so we could just be seeing a consolidation that go on. That support was from the gap of December 20th. So at any point in time that you would play this to the downside here, you want to see it close inside 1147.12 out there. You don't want to see a third test and a rejection out there because, boy, that starts to get very strong. That is inside the Russell 2000. We'll get back from this break. We'll go take a look at the Dow. Then we'll take a look at the ETF structures, and then anything else that you'd like. Just got to give us a call at 877-927-6648. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow off 46 points, S&P up 1, NASDAQ composite up 11, Russell 2000 flat, NASDAQ 100 up 11, New York Stock Exchange now turning green, up 4 points. To the downside, silver and gold. Silver is trading down 39 cents, off about 2% this morning. Gold is down $8. It's trading at $12.21. Let's go back and check in on the Dow. Let's take a look at what is maybe one likely outcome out here, to put it together with what we should be looking for inside of the New York Stock Exchange. So we know on the New York Stock Exchange we've got the island reversal. I've got the price oscillator that is still declining, so we've had price moving higher, the oscillator moving lower. That's never a good scene out there, but it's a divergence that certainly could resolve itself on a continued push higher out here, but it needs a lot more net advancing issues in order for that to take place. So we know we've got the bearish signal inside of the New York Stock Exchange. Remember, the beauty there is that it's such a bearish signal that if it gets taken out, it just tells you how strong the continued momentum is inside of the marketplace. So that is it's great to be able to have that out there from both sides of the trade, in my opinion. Inside of the Dow, what the Dow has done It's completed two A to B equals CD patterns. If you're watching us on Tiger TV, the two patterns that we are taking a look at, number one, well, it's really completed at least three patterns out here, right? It completed the 1,000-point move, having broken the consolidation, so it made that move. That also completed a 1 to 1.618, A to B equals CD up. That was the 8-point on this was the bottom of the consolidation range, the June 24th low, 14,551. The B point of the A to B equals CD. That took place, let's see, 15,658 on August the 2nd out there. 15,658 and a little bit of change. Pulls back, makes a low out here back on August 28th. Gets down to 14,760. Your 1 to 1.618, A to B equals CD, is what was completed on December 31st. Got up a little bit higher than that level, but really completed. So that's one pattern. A second pattern that completed, smaller A to B equals CD, and that was off of the November 5th swing point low out there. That's your A point at 15,522. Your B point out here on November 29th. Your C point, December 12th. That was a 1-to-1, A to B equals CD. What else happened? Well, the horizontal line is going across my screen here for the Dow. Those are your primary trading range boundary lines. So what we've got here is at 16,567. That was the upper level of the primary trade boundary line out there. So it hit that as well. So you got a third pattern. A fourth pattern out here is that from the 14-period relative strength standpoint, it was in the extreme overbought condition. Now, the last couple of times up here, meaning the highs in November 29, 2013, we saw a pullback. A decent pullback. Well, let's take a look. What was that? I won't say decent. The pullback came right back into the bottom of the consolidation level. That's what it was testing out there. Then, when the relative strength got into the overbought condition back in September 18th, 2013, it went ahead and made a measured move, 100% move to the bottom of the consolidation range. Then, when we saw price get up to the August 5th highs out here, August 2nd highs out here in 2013, what did it do? It pulled back into the bottom of the consolidation range. Then when we saw highs out here back in May of 2013, what happened? Pulled back into the bottom of the consolidation range out there. So we've got enough signals out here, so this really helps us to understand the trend inside the market. Now, what we can see that could take place here, because yesterday the Dow, I'm going to explode this up. Yesterday what the Dow did was it closed inside of the swing point from December 31st, and that was at 16,511.48. Look, if you're a bear, what you actually want to see, you may not want to hear this, but what you really do want to see is you want to see a push higher inside of the Dow. You want to see it get up and over 16,588.25. I'm not talking 16,588.26, okay? You know, at least a few bucks on there, $5-10, something like that. You want to see it push higher. You want to see it push higher quicker, sooner rather than later, and you want to see it do it because if it does it sooner rather than later, chances are it's going to do it on less relative strength. And then what you would want to be looking for is some type of bearish reversal candlestick pattern. Then you would have everything cemented in place for some type of retracement inside of the marketplace. So long as you've got that taking place, and at the same time, what we have is we still have that island reversal inside the New York Stock Exchange. And whether you're bullish or bearish, it doesn't really matter. Those are the patterns that you want to be able to look at in order to be able to help guide your next move on whatever time frame it is that you are trading upon. So that's what I think that we should be looking at, because the Dow has actually been strong out here. And the New York Stock Exchange is giving us really one of the weaker signals. And then, of course, we do want to be paying attention to the NASDAQ composite, because there's not a chance in the world, how do you like that this market goes down without the NASDAQ composite probably leading us down. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. It looks like it's the Dow that did not get the memo last night. It's trading off 55 points. All the other indexes are green, slightly green. S&P 500 up 91 cents. The composite up 15 bucks. The Russell 2000 up 59 cents now. NASDAQ up 14. New York Stock Exchange up 1.5 out here. So I had a request to take a look at Baidu. As we take a look at Baidu, we'll look at it on a couple different time frames. First on the monthly time frame, and the point that was made, and rightfully so, is that Baidu's been going up on light volume. Okay, so that's it. Now, what you need to remember, this is at least what I think that you should remember, is that when you take a look at any stock chart out there, any stock chart, and you're using the different technical patterns, that what you should realize, what you should recognize is that volume is only one element Only one element. It is not the entire picture. There is no one indicator, really, unless it combines a number of different elements out there, that is only you need. When you take a look at a chart, and it's like kind of like the human body, so let's just come back to the chart here, because I'm a doctor. Dr. Rhodes. In any event, what you've got to take into consideration, you must take into consideration velocity, meaning momentum or speed. That must be taken into consideration in any stock chart that you take a look at. That's an element. And in fact, every stock, these elements are not spread out evenly, meaning 25% for each element. Because another element that is out there is also what I'll call the verticality. I don't even know if that's a word, but it's a word now, because it's a technical term, obviously, and it's referred to. It's really the energy or the angle. Now, I think one of the better indicators, but there are many out there, one of the better indicators is the power law vector indicator. So if you haven't tried the art of timing the trade charts out there, you really should, because David White's done an excellent job of building the verticality aspect of a move into. So that's one element. But remember, it's not the whole element out there. That only represents 1/4, I don't mean 25%, but, one of the 4 elements of any stock chart. Then you've got volume, supply and demand. That most certainly is an element out there. And then you've got really liquidity. How do you measure the volatility of a stock? And there are tools out there. There are different indicators. I'm not going to go into each of those. Maybe I'll do that tomorrow for you. And because I did work on the diamond, so I just need to pull it out. I did historical work on the Dow diamonds, and both from the long side and the short side. So I'll see if I can find it at some point. If I can't find it tonight, I'll try to find it over the weekend, something like that, even though it's just hump day right now. But I did the study, and it showed of those 4 areas of any on the Dow diamonds, what percentage should be applied to which of those areas. So to say that, hey, this is just going up on light volume and that means that you should try to sell it or something along those lines, that doesn't make sense to me, because it only represents one element of a stock chart. If we were to take a look at one of the other elements, let's call it momentum and speed, velocity. You can take a look at that by just simply measuring the A to B equals CD patterns out here. If you take a look at the A point on the monthly chart of Baidu, I'd come down to December 31st, 2008, around $10 and change. Right now it's trading at 184. Your B point on this that formed was up on July 31st, 2011, out at 165.96. The retracement that it makes, if we go from the low back in 2008 all the way up to the high out here, what you're going to see, it made probably about a 50% retracement. Now, 50% is not a number that I use, from a Fibonacci standpoint. Other than how I would use it is to recognize and take a look at the retracement where we saw the turn in the stock, this little bullish engulfing candle on the monthly chart that took place in May of 2013. How I would use that is to recognize that a normal move would get you down to the 0.618 level. And if the normal move doesn't get you down there and the market reverses before then, that tells you that there is some strength inside of this move. That the buyers couldn't push the market down to a level that would just simply be normal. They couldn't, the sellers couldn't push it down there because the buyers wanted to rush in. Now, if you take a look at the C to D leg, which really is perhaps more important than the A to B leg. Of course, it depends on whether you're in or whether you're not in on the chart out here. But the C to D move is stronger right now than coming off of the 2008 low to the 2011 high out here. This move here is stronger. How do I know that? Well, because price is on the left-hand side of the formation tool that I use out here. So on a monthly chart, I don't care if it's up on lighter volume. It only represents one portion of the pricing of the equity out here. So right now, velocity and momentum are saying, okay, now take a look at the weekly chart out here. So if we go down to a weekly, and the question I think originally was, it looks like just a straight up move. Hey, if you're in the stock and you're bullish, looks like a really nice, powerful move. It's the type of move you'd like to actually see if you are in the stock. Out here, because it's up and over resistance. Where's resistance? It's really this little piercing candle that we saw, this little dark cloud cover candle from month of August 31st out here, the high of which is 165.96 in July. That really becomes your area of support. 165.96 inside of Baidu. Now, what Baidu did do on a weekly chart, it didn't make the 0.618 Gartley buy pattern that I was looking for, which would have gotten a little bit lower. What it did do, though, and this is the key here, it made the A to B equals CD down. So a Gartley pattern, the only requirement of a Gartley pattern is that, you've got an A to B equals CD down pattern. Well, it did that. It made the 1-to-1 A to B equals CD by getting down to $89.16. It got down there. That's the only requirement. The other requirements that it makes a 0.618 retracement of a swing point or 0.786 retracement, those are just kind of natural harmonic numbers where price moves to. But that was not H.M. Gartley's conclusion. His conclusion was just simply you want to buy the first A to B equals CD down in a market that's trending up. And there's no question that it was trending up here. So that buy point actually came in, as was also making, which was nice, a 1.272 expansion of your B to C level. So it makes that move, travels sideways here into the time frame of about May 10th, 2013 before it really takes off topside. Now, the ultimate pattern that a Gartley forms is that it forms the C point of an A to B equals CD up. We kind of took a look at that on the monthly chart out here. The weekly chart's going to show you really the same thing out here. Price moving along strongly along the left-hand side of the chart out here. Now, what it does have at the moment, it does have a price relative strength divergent pattern on the weekly chart, but it only has the pattern that you're looking for. It hasn't confirmed or anything. You got no bearish reversal signal out here inside of a Baidu on a weekly chart, and it's up and over any kind of resistance that is present out here. So I would have to say that knowing that, yes, it's up on light volume, yeah, okay, but that doesn't mean that it's going to fall from grace. It does mean you have to know where volume is, because when the air comes out of the tank on any stock chart, so when the sellers really decide to bail, what it's going to do, that's when you really want to know where volume is on a stock chart. We get rid of the rest of the things out here. Why? Because that is the last time that you saw any kind of support. And so inside any kind of buyer, so inside of Baidu, that says that on a daily chart that it's got to hope that 163.39 and 157.45 is the place that on any type of significant pullback, because if it's not, then the next area where it would fall back to is where it last broke out, which is July in 2013, when it had 21 million shares to the upside. And that's how you would be using volume at this stage on this stock chart. So that is on Baidu. Had a request to take a look at light sweet crude, so let's switch over into the commodity sector out here. Light sweet crude trading right at its most significant primary trading range boundary line. 93.07 happens to be that number. If we take the daily chart out here, that is the area where we have the largest number, the quadrant, I'll say, the largest number of co-located opens and closes inside of light sweet crude out here. If light sweet crude is able to break below the 93-ish level and truly break below 91.77, it will be forming an A to B equals CD down. Now, volume here, let's see, volume at that swing point looks like about 160 to 230,000 contracts, and so far today we've seen 84,000 contracts. So it's pulling back into swing points, into these swing point areas here on some lighter volume. I will say this, and that is that the large commercials, at least as of last week, I don't know what they've done through yesterday, but the large commercials were looking for light sweet crude to move significantly lower out here. So that says to me that the likelihood of $88 to $84 is a real one inside of light sweet crude. If we take a look at Goldilocks out here, gold and silver. You've got gold trading off about $9 right now. Now, what I do like about gold here thus far, it did break a short-term trend line out here. It did that on the trading session of January 3rd, January the 6th. That was on Monday. You came back and you tested that trend line, rejected it. Now, if we just take a look at pullbacks out here, I don't necessarily like the candles that we've seen over the last couple of days. But so long as you'd like to see gold not close below the open session from January 3rd, which is 12.22. Right now you are trading at 12.20 out there. If we take a look at just normal retracements here off the recent low to high, you can see really you're trading right now at about the 0.382 level. So if this 12.22-ish area holds here, that could actually be setting up the C point of the A to B equals CD up inside of gold. Volume so far today, 95,000 contracts, coming into 123,000 contracts from January 2nd out there, 136,000 on January 3rd. So it is pulling back on some lighter volume. We take a look at the silver, which has been stronger than gold, getting a little bit of the kibosh. Now, I do not like this, and this being that the descending price channel that the metal has been traveling in, it broke out just slightly, broke back inside it now today, so that is not a good scene. Of course, volume, though, let's take a look at volume, because that's another aspect of this. And volume, you've got 29,000 contracts so far, coming into 28,000 contracts from December 31st. Not necessarily a good scene out there for the silver shiny metal. Let's take a look at natural gas, see what natural gas is doing here this morning. So we're now starting to see some candlesticks here that are, yesterday was a high wave candle out there. That means that it's lost its way. We had a doji candle that took place on January 6th, since this was not near its highs. The only meaning that this really has to me, another candle session similar to the high wave candle where it has lost its way out there. So it's lost its way to moving, quite frankly, to higher price. This wide-ranging bar, to me, this is the key candle out here, is the session from right now from December 31st, and that is what I would be watching for, both bullish and bearish out here, because you've got, in essence, what would be what's called a rising three, or in this case here, a falling three, and that's really what it is that you're paying attention to. And that is this candle session from December 31st, wide-ranging bar. So far, all we've seen are inside days, but a close below, if you see a close below, 420, we'll call it 443 out there. That would be the falling three. That's a continuation pattern to the downside, and that could then be setting up the A to B equals CD down. And this is what I believe that pattern would or could look like out here to take you down into about the 395 ish range out there, 389, somewhere right around. That would set up your Gartley buy pattern inside of natural gas. Of course, you might be saying, hey, why did you pick that instead of 405 out there? Well, visually, it looks like to me, let's take a look at the retracement that we see here. Well, just simply because right now, that's what I picked. More so because it's closer to the 0.618 retracement level, and what we can see here is price still traveling right now on the left side of the A to B, of the C to D leg out here. But right now, the key area to be watching is the body of December 31st, and that is on natural gas out there. Let's go take a look. I didn't do the ETF structures for you, so my apologies for that. Let's go do that now. At least I don't believe that I did. And if I did, somebody knocked me upside the head and say, hey, you're going over stuff that you already went over. So since nobody's knocking me upside the head, let's go to it. Let's take a look at the Qs here first. As we take a look at the Qs, what do we know about the Qs out here? Well, we know the Qs came down and tested this swing point from December 18th, that high-volume swing point, which is a bullish situation, not a bearish situation. It tested the high of that, which was 86.22, 68 million shares. The test came on a total of 32 million shares. If you can't bust them down, what are you going to do? You're going to go bust them up. And that's exactly what we have seen going on right now inside the Qs. The bottom of the December 31st swing point, just like it tested the top of that swing point from December 18th. Now what we're seeing take place today is a test of the bottom of the swing point high. That swing point is 87.52 on the downside. What have we seen take place so far today? We've seen 87.55 get tested. Volume today, 8 million shares moving and grooving into 24 million shares. So let me see here. If I can do my math exercise properly, we've been trading for an hour and about, 19, an hour and 20 minutes out here. So let's back off a little bit of volume, 8.1 million shares. Well, let's just say on this pace here, you're looking at about twice the volume as what we saw on December 31st. Now, December 31st was a full trading session. However, we got to probably take that into perspective that it was a full trading session during a holiday that most people really weren't working out there. So, what do you do with that 24 million shares? You got to increase it by something. I don't know what the number is that you increase it by. What we can do is this. If you see the Qs close inside 87.52, I don't care what the number is. It says it wants to go test the high, 87.96. 877-927-6648. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. I understand that Basil has actually personally delivered the memo to the Dow, which it did not get as the other indexes did. The S&P is up, it's flat. It's up 32 cents. Composite up 12. Russell 2000 up 1.5. The Dow is off 67 points out here. Now, what I want to do here is, real quickly, before I go to Rick in British Columbia here, is what the NASDAQ futures have done on the 30-minute chart is the 0.786 Gartley sell pattern that was in place. It failed. Now, it should not have failed like this. It was confirmed with the bearish reversal signals out here. It failed. Oftentimes, when a Gartley pattern fails, it turns into a butterfly. We've seen 100% move of a set of swing points here, so it makes sense for it to back off. But often, if in fact this turns into a butterfly, it says 3583 is one of those butterfly areas, and the other butterfly area is 3604, and that's on what was the weak link out there in the marketplace. So we want to be paying attention to that. In the meantime, let's go all the way out to British Columbia to our man Rick, who wants to take a look at Staples. Thanks for calling. Thanks for holding, Rick. Happy New Year to you. How are you?
Really good, thanks.
Excellent. I am doing great.
I don't know. I know you don't have a lot of time left, so we'll get on it. Yeah, I was wondering if you could put a 5-year chart on SPLS, and I'm just curious if you think that's an inverted head and shoulder pattern.
Yeah, I mean, it certainly does.
What you think of it, that's all.
Are you, so, you know, what I would say, are you trying to play this from the short side?
No, actually the long side.
Okay.
But go ahead.
No, that's okay. I just wanted to. And are you in it yet, or you're looking for?
No, I'm not. But I'm just curious what you think of it. Like, you think the buy should be down at 14? You think the volume down at the lows got to get tested?
Yeah.
You know, it's a tough one, but I know that I watched actually some analysts yesterday on it. One guy was really bullish on it, and I'm thinking, you know, it doesn't look that bad on a lot of 5-year. Like, he actually mentioned the 5-year chart. And, you know, I mean, it can go down to even 12, and there's nothing wrong with it, you know, kind of thing.
Yeah, you'd have to say, in order to really get bullish on this, what you'd want to see it at least do is break above that falling window, that gap down, because it's been tested. And that was the gap with volume. That's the area that you're looking at, you know, in that $14 area. But what I'm looking at is how it responded when it last got up there, and that's at the low. I'd be really watching the benchmark of 1643. You know, if it can break through that, that would tell you that you've got some momentum there. Now, that doesn't mean it closes at 1644. That's not a lot of conviction. Certainly like to see it close over $17 or what have you. But right now, that's your resistance area. So if you're going to take a stab at it, what I would say is that the 8-period exponential moving average right now, 8, 9, whichever one you would use, is acting as a little bit of a support point. So I'd have to say right around the $15 area, not 15.65, would probably be the first place that you could take a gap.
There's even a gap at 14.50 3 months ago.
I see it.
It kind of broke that with lighter volume as well. So, you know. But anyway, also, I just got to mention to you, the DIA had huge volume today. I don't know how the Dow is, but I know you like looking at ETFs. The DIA had massive volume today.
Okay. You know, the volume yesterday as it went into the swing point, thanks for pointing that out to us, Rick, because I had not noticed that. Yesterday it went into the swing point with similar volume. So that was pretty, you know, bullish. I was pretty positive that it should still go out and test the highs. But you're saying now we've got some volume to the downside out here?
Well, you put it on an hourly chart today, and it had massive volume to the downside. I don't know, you know, why or what. And also, I mentioned the Fed minutes come out at 11, so have, you know,
Got it.
2 o'clock your time, sorry.
Got it. Hey, thanks so much for calling, Rick. I appreciate it. Folks, stay tuned. Our man Basil Chapman is up next. It is Wonderful Wednesday. After Basil, we've got our man Larry Pesavento. Then we've got Daryl Martin. We've got David White. We've got a replay of a show from 3 to 4, and then Tom O'Brien show from 4 to 6. Have a fantastic, wonderful Wednesday, folks. Look forward to seeing you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.